Supermax Corp is mulling a dual listing on the Singapore Exchange. The glove maker, which announced a jump of nearly 32 times in its latest quarterly net profit, says the move will expand and diversify its shareholders' base and serve as a platform for it to pursue growth opportunities by providing additional channels to raise funds if necessary. At the moment, the plan is still at an initial stage and the structure of the proposed listing has not been finalized. Supermax says it will make more details available in due course if and when it finalizes the plan for and approves the exercise. The glove maker posted a record quarterly net profit of 789.52 million for the first quarter of FY21 thanks to higher average selling prices for gloves and continued robust demand for its products. Quarterly revenue surged 265.6% to 1.35 billion. Supermax says its already sound financial position has strengthened dramatically, highlighting its net cash position with cash and bank balances amounting to 2.36 billion as of end September. Glove maker Hata Holdings has recorded its best ever quarterly net profit of 544.96 million in the second quarter of FY21, a jump of about 5 times from last year. This was thanks to higher sales revenue, higher average selling price, lower material costs and better production efficiency. Quarterly revenue leapt 90% to 1.35 billion ringgit. For the cumulative 6 months, net profit surged by 286% to 764.68 million, while revenue rose 68% to 2.27 billion ringgit. The board recommended a first interim dividend of 3.85 cents per share to be paid on December 18th, 2020. Moving forward, the group says it remains optimistic of the longer-term prospects, underpinned by growing demand for rubber gloves and ongoing expansion plans. For now, it is continuing with the commissioning of Plant 7 of its NGC facility, which will boost its annual installed capacity from the current 41 billion pieces to 44 billion by FY22. Bursa Malaysia says its third quarter net profits surged more than twofold to 121.94 million on the back of higher operating revenue. Top line for the quarter nearly doubled to 237.74 million ringgit. For its 9-month report card, Bursa's earnings jumped 94.5% to 272.89 million, while revenue increased by 53% to 568.27 million from a year earlier. Bursa Chief Executive Officer Datuk Muhammad Umar Swift says the exchange delivered an exceptional 9-month performance against the backdrop of unprecedented circumstances with the highest ever 9-month PATAMI since listing in 2005. He said the ongoing developments with regards to COVID-19, low interest rate environment, Putrajaya stimulus packages and the gradual reopening of the economy continued to support investor participation across segments. But while key economic indicators are pointing towards an improving outlook for the Malaysian economy, he cautions that the ongoing developments of the pandemic will continue to influence the volatility and performance of the markets. Despite the challenges, he believes the stock exchange operator is well positioned to continue developing the marketplace and make further progress on its strategic plans. KAF Research says the debt ceiling may be raised again to 65% to accommodate Budget 2021 as the level of federal government debt is expected to hit 63.6% of gross domestic product next year. This comes as government debt rose to a record 854.1 billion as at end June after adding 61 billion or 7.7% to the debt to fund stimulus packages and a record deficit for 2020. Economists Vincent Liu and Venice T wrote in a report today that on a rolling 4 quarters basis, government debt had hit 59% of GDP. This is close to Putrajaya's self-imposed debt ceiling of 60% of GDP that was recently raised from 55% to accommodate the surge in debt requirement. They see the level of government debt continuing to rise to 61.9% of GDP in 2020 and subsequently to 63.6% in 2021. Malaysia's Budget 2021 is expected to be an expansionary one, as the government faces challenges in striking a balance between supporting an uneven economic recovery and managing the widening fiscal deficit. According to The Economist, measures that will likely feature in Budget 2021 include continued assistance to the B40 and M40 groups, enhanced tax stimulus and incentives, higher spending on healthcare and frontliners, and measures to accelerate the digitalization drive. The Securities Commission has granted a further extension of 4 months to the Armed Forces Fund Board to make up its mind on the privatisation of its debt-laden flagship group, Bousted Holdings. LTAT announced this in a statement today. It noted that the Commission has advised that it will not grant any further extension of time beyond the new deadline of February 2nd, 2021. The fund added that there has been no material development in respect of the proposal and said its announcement does not amount to a firm intention to undertake it. 5 months have passed since LTAT first expressed consideration for the corporate exercise. In May, it had confirmed that it was looking at taking Bousted private at an indicative price of 80 cents per share. Based on the indicative price, the proposed exercise would cost LTAT around 660 million ringgit. The fund has already received the green light from Bank Negara for its negotiations with Bousted, which holds equity interests in 4 public-listed companies: Affin Bank, Famaniaga, Bousted Plantations, and Bousted Heavy Industries Corp.